We live in a world of incredible wealth, but also shocking inequality. The disparity between the affluent and the less fortunate is more pronounced than ever. In every city you can see the stark contrast between opulent neighborhoods and those struggling to get by. This isn't just a local issue, it's a global phenomenon. The gap between the rich and everyone else is vast. It's a chasm that seems to widen with each passing year. The wealthy have access to resources and opportunities that most people can only dream of. This disparity is evident in education, healthcare, and even the basic quality of life. One key difference? How they handle taxes. The wealthy often have teams of experts to help them navigate the complex tax system, ensuring they pay as little as possible. Meanwhile, the average person struggles to understand the basics, often missing out on deductions and credits that could save them money. Understanding tax avoidance is no longer just for the wealthy. More and more people are realizing the importance of financial literacy. Workshops, seminars, and online courses are becoming increasingly popular, helping individuals take control of their financial destinies. It's about taking control of your financial future. By understanding the tax code and planning accordingly, you can make informed decisions that benefit you and your family. This isn't just about saving money, it's about securing a better future. Taxes are crucial for funding public services. They pay for the roads we drive on, the schools our children attend, and the hospitals that care for us. Without taxes, these essential services would cease to exist, and our quality of life would suffer immensely. We all benefit from roads, schools, and hospitals. These are the building blocks of a functioning society. They provide the foundation upon which we build our lives. When everyone pays their fair share, we all prosper. But the wealthy often pay a smaller percentage of their income in taxes than the middle class. This is due to various legal loopholes and tax strategies that are available to those who can afford expert advice. It's a system that in many ways favors the rich. This is due to legal tax avoidance strategies. These strategies are not illegal, but they do raise questions about fairness and equity. Shouldn't everyone contribute their fair share to the society that supports them? Knowing these strategies is not about dodging your duty, it's about being smart with your finances. By understanding the tax code, you can make it work for you, just as the wealthy do. This knowledge can empower you to make better financial decisions. It's about making the system work for you. The tax code is complex, but with the right knowledge and tools, you can navigate it effectively. This isn't about cheating the system, it's about understanding it and using it to your advantage, just like the wealthy do. They have the resources to hire experts and plan meticulously. But you don't need to be wealthy to benefit from smart financial planning. With the right approach, anyone can improve their financial situation. This isn't about cheating the system, it's about understanding the rules of the game. The tax code is a set of rules, and like any game, those who understand the rules best are the ones who succeed. It's about understanding the rules of the game. By educating yourself and staying informed, you can make the tax system work for you, ensuring a more secure and prosperous future for you and your family. For the wealthy, tax avoidance is about more than just keeping money. It's about preserving their hard-earned wealth. Every dollar saved in taxes is a dollar that can be reinvested. This reinvestment helps their money grow even more. This could be in businesses, real estate, or other ventures. This, in turn, can create jobs and stimulate the economy. Taxes can significantly impact the growth of wealth over time. By legally minimizing taxes, the rich ensure their money works harder for them. They can then pass on more to their heirs. Offshore accounts are often misunderstood. They're legal if declared and used correctly. Think of them as bank accounts in foreign countries. These countries often have lower tax rates than the US. Many reasons exist for opening an offshore account. Asset protection is one, privacy is another. However, strict regulations govern these accounts. It's important to follow the law and seek expert advice. Offshore banking isn't just for the super rich. It can be a viable option for individuals and businesses, especially those with international dealings. But transparency is key. Hiding money offshore is illegal and unethical. Trusts are powerful tools for estate planning. They are legal arrangements that allow you to manage your assets in a structured way, ensuring that your wealth is distributed according to your wishes. Trusts can be tailored to meet specific needs and goals, making them versatile instruments in financial planning. They allow you to manage assets and transfer wealth efficiently. By setting up a trust, you can specify how and when your assets will be distributed to your beneficiaries, providing peace of mind that your financial legacy will be handled as you intend. This transfer happens during your lifetime or after you're gone. Trusts can be designed to take effect immediately or upon your death, offering flexibility in how you plan your estate. This ensures that your loved ones are taken care of, regardless of the timing. Trusts can minimize estate taxes for your beneficiaries. By strategically placing assets in a trust, you can reduce the taxable value of your estate, potentially saving your heirs a significant amount of money in taxes. Different types of trusts serve different purposes. For example, a revocable trust allows you to retain control over your assets and make changes as needed, while an irrevocable trust offers greater tax benefits but requires you to relinquish control. A revocable trust lets you maintain control of your assets. You can modify or dissolve the trust as your circumstances change, providing flexibility and control over your financial planning. An irrevocable trust offers greater tax benefits. Once established, it cannot be easily altered or revoked, which can provide significant tax advantages and protection from creditors. Choosing the right type depends on your individual circumstances. Factors such as your financial goals, family situation, and tax considerations will influence the best type of trust for your needs. A trust is a legal entity that holds and manages assets. It acts as a fiduciary, meaning it must act in the best interest of the beneficiaries, ensuring that the assets are managed and distributed according to the terms of the trust. It acts in the best interest of the beneficiaries. This fiduciary duty provides a layer of protection and assurance that the assets will be used wisely and for the intended purposes. It's like having a financial guardian for your wealth, ensuring it's used wisely. Trusts can provide peace of mind, knowing that your financial legacy will be preserved and managed according to your wishes, benefiting your loved ones for generations to come. Section 5. Investing smart. Growing wealth tax efficiently. Not all investments are created equal when it comes to taxes. The wealthy understand this and invest strategically. They favor investments that offer tax advantages, such as municipal bonds. Municipal bonds are debt securities issued by state and local governments. The interest earned on these bonds is often tax-free. This makes them attractive to high-income earners seeking tax-efficient income. Another strategy is investing in Roth IRAs. These accounts allow your money to grow tax-free, and you don't pay taxes on withdrawals in retirement. It's a smart way to build a nest egg. Section 6. Business expenses, a world of deductions. Owning a business opens up a world of tax deductions. These deductions can significantly reduce your taxable income, making it essential for business owners to understand and utilize them effectively. From the cost of goods sold to advertising expenses, there are numerous opportunities to save. The self-employed can deduct expenses related to their work. This includes not only the obvious costs like office supplies and equipment, but also more nuanced expenses, such as a portion of your home utilities if you work from home. This includes everything from office supplies to travel expenses. For instance, if you travel for business, you can deduct airfare, hotel stays, and even meals. Keeping detailed records of these expenses is crucial for maximizing your deductions. The key is to keep accurate records of all expenses. This means saving receipts, maintaining a log of business miles driven, and keeping track of any other costs associated with running your business. Proper documentation is essential for substantiating your deductions in case of an audit. A good accountant can help you identify every deduction you're eligible for. They can provide guidance on what qualifies as a deductible expense and ensure that you're not missing out on any potential savings. Their expertise can be invaluable, especially as tax laws change. This can significantly reduce your taxable income. By taking advantage of all available deductions, you can lower your tax liability and keep more of your hard-earned money. It's a strategy that can make a big difference in your overall financial health. Home office deductions are a prime example. If you have a dedicated workspace in your home, you may be able to deduct a portion of your rent or mortgage interest, utilities, and even repairs. This can be a substantial saving for those who work from home. If you have a dedicated workspace in your home, you may be able to deduct a portion of your rent or mortgage interest. This deduction is based on the percentage of your home used exclusively for business purposes. It's important to measure your workspace accurately and keep detailed records. It's all about maximizing your deductions within the law. By understanding the various deductions available and keeping meticulous records, you can ensure that you're taking full advantage of the tax benefits available to you. This proactive approach can lead to significant tax savings and a healthier bottom line for your business. Section 7. Loopholes in the system, navigating the tax code. The tax code is complex and ever-changing. Within its pages lie certain provisions that can benefit taxpayers. These are not illegal loopholes but rather opportunities within the law. One example is the Research and Development Tax Credit. This credit rewards businesses for investing in innovation. It's a way to encourage technological advancement and economic growth. Another is the Earned Income Tax Credit. This credit is designed to help low and moderate income working individuals and families. It provides a financial boost to those who need it most. Section 8. Real-world examples, how the rich play the game. Real-life examples illustrate how the wealthy use tax strategies. Take Amazon, for instance. The company legally minimizes its tax burden through various deductions and credits. Another example is real estate mogul Donald Trump. He has long used depreciation and other real estate-related deductions to lower his tax bill. These strategies are legal and available to all real estate investors. These examples show that understanding tax law is crucial. It's not about evading taxes but minimizing them within legal boundaries. Seeking expert advice is key to navigating this complex landscape. Section 9. Your takeaway. Lessons in wealth preservation. Tax avoidance is not just for the rich. It's about taking control of your finances and making informed decisions. By understanding the strategies used by the wealthy, you can apply them to your own life. Remember, knowledge is power. Educate yourself about tax laws, deductions, and credits. Seek advice from financial professionals. And always stay informed about changes in the tax code. By taking these steps, you can protect your wealth and build a more secure financial future. Remember, it's not about how much money you make, but how much you keep.